Wow. What a stock market we have on our hands, folks. In this video, I got to share with you some very strange activity going on in the markets right now. Some strange stuff I'm seeing, okay? We're going to get into that. We're going to get into where this market's headed, the price activity that's going on in this market, which is absolutely insane. And yeah, it's going to be an action-packed video. Hope you guys enjoy this as always, okay? First off here, I thought we'd start out with this company called Upstart. Some of you guys might know about it, some of you might not, okay? UPST. So this company, is basically kind of in the loan business, okay? And they're supposed to use artificial intelligence to make loans and those sorts of things. So this Upstart, right? This stock is down 55% today. 55% today. They reported earnings last night. I looked at the earnings report, okay? And this is not a stock I usually track at all, but I looked at the earnings report, and it was not like it was a disaster or something like that. They missed on their upcoming quarterly guidance, but it wasn't like this is, oh my gosh, their business is done. They're over. It wasn't like that at all. I looked at this earnings report, and I was just like, wow, 55% in a day on the back of that. And here's the thing with this Upstart company. This stock, this is the past 8 months. This stock had already been destroyed, like literally decimated and destroyed, right? This stock is now down over 91% in the past 8 months. In the past 8 months, 91%. They got a real revenues. And the other crazy thing about this company, I was looking into it, and they actually are a profitable company. They got a positive current P. They got a positive forward P, so they should be profitable the next year. So I just thought that was amazing that this company has fallen 91+%, has real revenues, like substantial revenues. It's supposed to do well over $1 billion this year, and is profitable, and yet the stock gets treated like that, right? But that's the sort of market we're in, where it's sell now, ask questions later. That's what we're in right now, and it's like, how does that even happen? 55% in a day, like, come on, man, you gotta be flipping my flapjacks, okay? This is insane, okay? This is pure insanity. So I go to bed for like 4 a.m. It was a long day yesterday. Conference calls, videos, so much going on, like a lot. Private live stream with the private stock group. It was a busy day, okay? So I went to bed at 4 a.m. Markets were all substantially green, okay? Dow, S&P, Russell, NASDAQ, everything was super green. I wake up at 10 a.m., everything's red, and very red, actually, okay? An hour later, everything's very green again. And this is a sort of market we're in right now where you don't know what's going to happen here. It's like, in a matter of 6-7 hours, you can go from everything's looking great to everything's awful, back to everything's looking great, back to everything's looking awful. And that's the market we're in right now, where it has no clue where it wants to turn next. And this, the main issue with this is it creates what I call trust issues from it for investors, right? Because you start to not trust anything you see in the market. You see a stock goes down 55% in a day. That's a profitable company, actually, and is growing and those sorts of things. And you're like, how does that happen when the stock was already down like 70-80% going into those earnings, right? And you see the market's extremely green, and then they go red. And then they go green. And then who knows, maybe they end up going red by the end of it, right? And so you start to not trust the market. You start to not trust any moves in the market, because you're looking at this and you're like, every single time, I believe it's one way, it ends up turning the other way. And it creates massive trust issues for investors, right? ARK ETF here today, right? I've been talking about this one recently, where it's just like, where does it find a dang bottom here? And ARK ETF today hit 38. The only time in modern times you could find ARK that low, the March 2020 and December 2018. Before that, you really need to go back to like 2017 or so. And so this is just an ETF that just can't find any grip in this market. And you start to look at it, and it's like how is it not bottomed yet, right? And who knows, maybe today was a bottom, but you start coming up on these numbers, and it's like, how is this company not bottomed? But the issue is, in the market right now, right, folks have just been, and it's not even really the retail crowd for the most part. It's big money, I guess you can say, where they've just put this relentless selling pressure on all these stocks, and they've refused to be buyers out there in the market. And I saw this clip yesterday on CNBC of a fella who was worked for Jefferies, and basically said there's just no buyers coming to the rescue right now from what he sees on kind of the institutional side and whatnot, right? And that's the market we're in right now, where they just refuse to put money in, and we're so like addicted to the Fed, right? So addicted to the Fed that the market says, well, the Fed might not come to the rescue till fall time. We don't believe in any stocks in that scenario, and we'll see. Okay, but that's a market that's in a messed up place right now. Okay, look at coin. In the past 7 months on coin, 77.7%. Oh my gosh, the sevens are flying. This is a company that's actually reporting after the bell today. And, the coin's always done a great job with their kind of building out things over time. But man, Bitcoin all of a sudden has fallen into some struggles and actually dipped below 30K recently. And Bitcoin's been one of those things that's been kind of diamond hands and people have been holding up pretty decent in it. It's like, oh, if you lose that one, what do you have left at this point in time? And this is a major position, obviously, in the ARK ETF. And it's just like, can it do anything good? And we'll see what happens on the earnings here. The good thing with coin is, look at the P ratio. This P ratio is self-explanatory there. That's the really good thing with coin. The bad thing with coin is obviously Bitcoin price going down a lot. And obviously the crypto exchange and brokerage business is highly, highly competitive. But, at least the valuation's really, really low for the stock going into these earnings. So at least that's some, like I guess you can say, reprieve for investors at this standpoint, right? You look at a company like SoFi. This company, very strangely, I guess, pre-released numbers when they weren't supposed to. It was a premature release, okay? And the numbers came out before they were supposed to come out. Strange. Alrighty. So that happened. I will say SoFi is a big retail stock. I would call it definitely, I don't know if it's a top 10 retail stock in terms of like retail investors liking a stock like this, but I would definitely put it in like the top 25 category SoFi. And like retail investors have been through a lot for the past, year and 3 months or whatever, right? Basically since those highs of February of 2021. It's been vicious, and specifically the last 7 months. And, retail just can't get a break. SoFi coming out and pre-releasing numbers, like it's just a horrible look. It's just like sloppy, right? It's like, what are you guys doing? And this is after Affirm did that last quarterly report, right? Affirm had a situation like that, and you would think these companies would be on and make sure their numbers don't just magically come out in the middle of the day. And then here SoFi was. The numbers from SoFi look pretty darn good. I don't know if they beat estimates or missed estimates. I don't track it on that level. But I will say, like, all their growth metrics were dang good. Like there was nothing I saw in there that was like, oh, that fell off big time, or that's horrible. Like everything I looked at was pretty solid, but it's not a good look. The investors already have trust issues in this market, man. You can't give any fuel to the fire in this sort of market. You give any fuel, and it's like burning the whole dang forest down, man. And that's the way it is in the market right now. And so SoFi, the stock just absolutely tanks through the floor because they pre-released numbers. I don't even think it had anything to honestly do with the numbers. I think it was just the fact that they pre-released and people didn't like that, and it created more trust issues there, right? Look at Affirm. This stock is down almost 90% from November now. Almost 90%. This is one of those companies that's big into the, buy now, pay later movement, which obviously PayPal is playing in that as well, which PayPal is a stock I've been buying for the last couple months because the valuation has just gotten really, really compelling there. Affirm, I think is a bigger risk play. And you got to understand, when it comes to any of these, we can call them fintech companies if we want to call them that, right? Whether it's Affirm or SoFi or Coin or any of these companies, we'll group them all into fintech, right? No one wants to hold fintech right now. And the reason being is there's so much talk about recession. There's so much talk about interest rates going up, which could hurt the loan business rate, which could hurt the investment markets. And when you have things like that happening, right, no one wants any piece of fintech. Heck, people don't even want pieces of the big banks. You look at a lot of the big banks. A lot of the big banks right now are at right around 52-week lows, okay? So you're looking at big banks right around 52-week lows. You're looking at all these fintech companies at all-time lows pretty much. Literally all of them, pretty much every fintech company in the public markets hit an all-time low today during the trading day. Just think about that for a moment. All-time low, the lowest they've ever been. And these companies just can't find footing anywhere because no one wants to hold those sorts of stocks and the big question is if you're going into a recession scenario or if you're going into a scenario where interest rates continue to go up, right? And so It doesn't really matter what these companies really report for numbers. Just they just don't want any piece of them right now. That's the bottom line with these stocks, and they can't find a bottom anywhere. You look at Rocket. Rocket I would almost put into the fintech space as well, but I put it a little more into a housing play, right? Because they're huge in the mortgage business, refinancing business. That's massive for them, right? A company trades at a 3 PE ratio, 3. It's ridiculous, okay? But when it comes to Rocket, who wants to hold Rocket right now? And this one reports after the bell, and we'll see what happens with that one. Hopefully for Rocket shareholders, it goes up and starts recovering. But who wants to buy Rocket right now when everybody's looking at the housing market and saying, the housing market's at jeopardy of being in a bad place for the next couple of years, right? Where prices have gone way too high, mortgage rates continue to skyrocket, and a lot of folks don't see that ending, at least for the next few months, if not the next year. And so everybody's looking at that and they're like, why do I need to own a Rocket right now when everything's just going to continue to get worse and worse and worse for the next several quarters, if not the next year or two? And so people are like, I'm not in a rush to buy that. And when you're in a market that's just been downtrending for 7 months, right? No one's in a rush to do anything. Big money's not in a rush. They're like, let's just drop it all to the floor. Let's drop it all to the floor, man. Let's see Rocket at 5. Let's see SoFi at, 1 or 2, whatever. Because they're looking at it and they're like, we got the big money. We can sit this out and let everything fall to the floor as much as we want to let it fall to the floor. And when we want to get back in, we'll get back in. We'll buy up and we'll make a ton of money. And so, that's a dangerous game, playing with kind of big money and going back to that whole movement of, last year with the movement against, the whole AMC GameStop situation, going against the hedge funds, things like that. The dangerous movement with that was, man, you got to understand, these funds have so much money, like the firepower on the other side is just immense. And if they really want to screw you, they can really screw you, man. That's just the bottom line with that. Rocket's at a 0.1 price of sales. I don't think I've ever seen a price of sales that low before. What the heck? Oh my gosh. Yeah, this is just something funny I had to include in here, random. So basically the bad news is, guys, it looks like we're going back to pre-1900s pricing for the stock market. Somebody posted this up. It's like, and to be fair, when you're in a vicious bear market, like everything's on the table at that point in time. So it's like, hey, maybe we're going back to those pre-1900 prices. It's just how it is, right? In the market right now, I think investors are at different stages. And when I say investor, I'm specifically now talking about the retail crowd, okay, not institutional money or anything like that. Although they can sometimes fall into that category as well, right? I see different people at different stages right now of the market. And I think the 3 main stages I see people at. One is the folks that have been capitulating recently, that they're getting out of the market and they're just like, I'm done. I can't lose any more money. I'm down 50%, 60%, 70%, whatever, right? I've definitely seen some of those folks recently. I've seen the crowd that's just, angry about the Fed and all the stuff that's going on, and like, why is Upstart down 55% today? It wasn't like the company's over. They went bankrupt. Like why is that stock down 55% when it had already been hammered, right? So I definitely see some in that crowd. And I think most people are actually in this category right now. I would call it the depressed side, right? Where, they're just like, just so over it, right? Just so over this vicious kind of downward move in the market. And so those are the 3 categories I think folks are in. Now, the big question is whenever. I don't know when that is, but whenever this market starts to come back, we'll be in this cycle, I can guarantee you that, where no one's going to believe it. And the reason this happens, okay, is because when you see day after day after day, the market go lower and lower and lower, and stocks go lower and lower and lower, right? When things start to recover, you think it's automatically just going to fall back down. And the reason being is you got like confirmation bias for like 7 months, a year, 2 years, like however long the thing lasted, right? And so every single, let's call it advance in the market ended up dipping further, right? And so you look at like 2007 to 2009, where the market fell basically for over a year and a half, right? It didn't fall in a perfect straight line for a year and a half. It had some up cycles in there, and if you go back to pull up a chart of 2007 to 2009, you're going to find it had several up cycles in there. But every single time, at the end of the day, what did it mean? Stocks went lower, the market went lower. And so that's what's been playing out for the past seven months or so. And so people are like, whenever the market starts coming back, no one will believe it. No one will believe it. They're like, we're just going lower. And you'll hear that out there, right? Even if today's a green day, people are going to be like, we're just going to go lower. We're going to go lower. And that's kind of, what folks start thinking, okay? I saw this is, very, very strange stuff. So I noticed this comment. It said, one thing I noticed is TTCF doesn't sell down in my public store in Orlando, but it sure moves a lot at Target. And so I noticed this account, it kind of sounded like a short seller account, because I saw this next comment saying, no unprofitable share diluting trash stocks go to zero. Okay. And so I'm like, I swear I've seen that comment earlier today. And so I started looking, and sure enough, I saw that comment, but just barely slightly different. 4 hours ago. True, TTCF doesn't sell in my public store in Orlando, but it sure moves a lot at Target. Okay. So then I search it. I'm like, is there more of these? And I found another one. I'll be honest, TTCF doesn't sell down in my public store in Orlando, but it sure moves a lot at Target. Short sellers are a weird crowd. Like, are they buying bots? Are they creating different accounts to leave these comments? Like, do they think that's going to make people sell out of the stock or something like that? The short seller crowd is a weird crowd, and if you guys have never been through heavily shorted stocks before, you will find out they are a weird bunch, man. I'm talking about a weird bunch. What good does that do? Do you think that's going to tank the stock, right? In regards to the chef, the stock did basically nothing in regards to obviously the move today, right, after those earnings. And somebody sent me a video of a guy praying in his car that Tattooed Chef stock crashed today. He's like, please, Lord, just make the chef crash, or TTCF stock crash. I'm like, what a strange bunch. That's all I get to say about that. I don't even pray that my stocks go up. Are you kidding me? You praying stocks go down? That's just ridiculous. But that's what you get. And when it comes to a short seller bunch, you got to understand this is a strange bunch. And if you've never been involved with the short sellers, they do weird stuff. They will buy bots. They'll make fake accounts to leave negative comments on stocks, to try to get people to sell out of stocks, to try to say whatever. It is the dirtiest bunch you will ever find, okay? I will tell you that much. And it is a strange group of people. And they root for companies to go to zero. They root for them to go to zero. And sometimes they're right. And a lot of times they're not right. And especially for the companies that have growth and have 5, 10, 15 years of growth in front of them, they don't usually get those situations right. But they will make up these accounts. They'll do whatever. They'll record videos of them praying in their car that these stocks go to zero. And a very, very strange bunch. And the only thing I will say that's more annoying than dealing with short sellers in a bull market is dealing with short sellers in a bear market. That's even worse, because dealing with that group in a bear market is awful, right? Because then you have them doing all their weird stuff and trying to get people to sell stocks by any means necessary. But on top of that, you have to hear the trash talk on top of it, right? And how they're making so much money and you're losing so much money. It's a weird group. I've went through this with a lot of stocks before. The most, I would say, kind of famous example of me going through a situation with short sellers was Tesla stock. When Tesla stock had $10.7 billion of shares shorted in that company at one point. It was the biggest short, in the market. And, that was the things that short sellers would do back then. I mean, it was ridiculous. And anybody that went through that cycle, about that. They will do anything to try to make the stock go down in the short term, right? Trying to bet these companies go to zero. And just a weird group. So you're going to have to deal with that in this sort of market. And then you're going to have to deal with not just the weird stuff they do and the bots and the fake accounts and all that stuff, but you're also simultaneously going to have to deal with them talking trash. So you just got to deal with that, okay? Now, so I think this is extremely, extremely important, okay? So what you're looking at is basically the VIX through my entire life, my entire life, not life in the market, my entire life on the planet, okay? And what you're going to notice is the VIX will spike high every once in a while, right? And right now we're going through one of those times where the VIX has spiked high. Is it spiking like it did in 2008? No. The entire financial system almost collapsed in 2008. That was a different situation. Is it spiking like it did in 2020 when, we were talking about the entire economy was going to be shut down for 3 years? No, it's not spiking like that, right? But Nonetheless, when you start getting up to the numbers we've been at recently, which over the past, I would say 2 or 3 months, we've been trading, 30 plus much of that time, and 35 plus for a good amount of time. And so what you got to understand is when you go through these volatility cycles, they shake a lot of investors out of the market, and you got to keep your head in these sorts of markets and make good long-term decisions for you and your money, right? Because I can tell you, these periods that you go through, they get a lot of people shaken out, man. And I'm talking a lot of people shaken out. When you talk about VIX over 30, 35, and you're talking about it stays elevated for quite a while, it ruins folks, right? And gets a lot of people out of the market. And it's your job to just push aside the emotions, understand this level of volatility will end, and great companies will be rewarded for their progress over the next 5 years. But right now, we're going through it. And that's the cycle you're in right now, and you just have to accept that, and you have to understand this is a part of the process. Now, the good news is, usually when you're going through one of these elevated, I would call it VIX cycles, right? Volatility's going pretty wild. You usually get a pretty nice period of a calm down after that, right? It's not like these time periods necessarily stay like that for 2 years or something like that. Like you can stay elevated for a few weeks, a few months, but you do start coming down, and then you get these kind of nice periods of market moves up, volatility's low, there's more clarity, everything gets better and better and better, and the bad news, when it goes from usually when you're in one of these cycles, it's like almost everything's bad news, and you go from almost everything bad news to everything's getting a little better and a little better and a little better, and so the VIX starts dropping more and more and more, and next thing you know, you're in a normal range of the VIX between 12 and 20, which is usually what you should expect, about a 12 to 20 range. And you look at, for instance, 2012 through right before Rona, we had a nice kind of 8-year cycle, let's call it, or so there, 7 or 8 year cycle where the market, as far as volatility, it had a few volatile times, but it wasn't anything crazy. It was pretty just chill, right? And we had a nice move up in the market. So, we're going through it right now. It will end, and great companies will prosper over time. Hope you guys enjoyed this video. As always, Hungry Bowl, we got our email newsletter. It's absolutely free to sign up for that. If you want to check that out, sign up for that. Check out the pinned comment down there. We'll send you all the latest news in the market that's going on that's very important to pay attention to, the business community, stock community, crypto community, all those things like that. Much love, and have a great day.